Welcome to Alternative Investments Chat,
where we demystify the world of alternative investments and financing for entrepreneurs and investors alike.
With these discussions, we hope you're more empowered to unlock opportunities in your business or portfolio. I'm Erin.
And I'm Erica. Let's get started. Hello, and welcome back to another episode of Alternative Investment Chat. So today we are continuing our journey in that real estate asset class. Now, you've probably heard the term seller's market and buyer's market, right? I think we all have. While we'll definitely be covering both, today we're just going to focus on that one side of the coin, the seller's market.
Totally. The common assumption is that the seller's market only benefits homeowners who are cashing out, aka our sellers. And everyone else is just there to kind of sit on the sidelines, be bench warmers, and kind of wait for the next thing.
Right.
But the reality is that it's way more nuanced, and sellers markets don't just reshape pricing, they change strategy, timing, and where smart money flows.
You're absolutely right. So today we're going to break down what a seller's market really is, who creates it, what creates it, how legislation and economy cycles fuel it, and most importantly, what all of our listeners want to know is how investors and REITs actually operate inside this. So let's go ahead and just dive right on in here.
Let's do it. So according to Investopedia, a seller's market occurs when demand for goods exceeds the supply, giving sellers the advantage to set higher prices. So plain English, too many buyers and not enough things for the buyers to actually buy. And when this happens, sellers suddenly, you could say, gain superpowers. They get multiple offers, some way above asking price, and buyers are willing to waive contingencies just to stay competitive. I actually just purchased a home, and while we're not exactly in a seller's market right now, we'll get to that, but this particular home was priced perfect. And what we're seeing in the market right now is that homes that are really great, that are priced really well, are still moving very, very quickly. And this particular home had a lot of people who were interested in it. There were 4 people total in the game. And we had to increase our offer 3 times. We ended up closing over asking price. And we ended up waiving a week of the close, so we had a shorter close, and we also did a shorter inspection period, aka shorter amount of time for us to say, just kidding,
never mind.
We don't want this because something is wrong with the house.
And sometimes things need to get a little uncomfortable just so you can close that deal, right? And I kept asking you during this whole journey, like, do you have an answer? Did you get it? Did you get it? Because you told me there were several people looking at it, and I wanted to ensure that, because you're my favorite. So I wanted you guys to get it. I don't care about those other people. But yes, and you told me all the short close and all the stuff. And I was like, man.
Yeah, it was a stressful time. We saw it on Friday. We had it under contract by Monday, I think.
Wild.
Where we had an offer in by Monday. And then we had it under contract by that Friday.
Yeah, so that guy was definitely, he was feeling like he was in a seller's market because he had people fighting for his.
Yeah,
but that's
for
okay.
sure.
So it's not just in the housing market that this also happens in. It's in other markets as well, like stocks, commodities, even businesses can potentially have this same kind of vibe.
Yeah.
Scarcity plus demand equals seller confidence, bordering on halfway arrogance sometimes because they're like, oh, I know what I'm doing. Okay, so let's kind of shift and talk about the why, because sellers markets don't just wake up in the morning and they're like, you know what? I'm choosing chaos today. I'm going to just make this crazy for everybody. So let's talk about those economics.
Yeah, exactly. And a lot of times they're actually manufactured a bit like, boy bands, my favorite being One Direction, or limited edition sneakers. We're putting them together. We're making a version of something that the people want or need.
Yes.
And at the heart of every seller's market is one simple equation, one that we all know from our basic economics classes, supply and demand.
Correct.
Let's start with the supply side of this equation here, or as buyers call it, where the heck are all the houses? Where'd they go?
Yeah, right. When you go to get on Zillow and you're like, there's 3, and you're like, what? That's all my choices.
These are my choices? Yeah.
So in a seller's market, supply is super, super tight. And we're not talking like skinny jeans type, okay? I know those are out. I actually
they're going to come back around. Don't worry.
I still wear them, and although I do have a pair of wide leg straight jeans in the Amazon cart that I'm ready to pull the trigger on, but I'm not quite sure yet. 'Cause that's Anyway, they're tighter than that. They're like vacuum sealed. Like I think about it when we cook at home, how we vacuum seal so we can sous vide everything. Can't let anything get in there, right?
Yeah.
So most people automatically just think that this is because, well, builders stopped building. That's why there's no houses, because builders stopped building, right? But the reality is that, yes, they did stop building, but for a whole list of reasons that you don't really think about.
Sure.
We've got zoning laws, permit delays, material costs, labor shortages. And in fact, like the material cost increase is probably doing way more damage than most people even realize, because if it's expensive to buy and you can't sell it for what you bought, it's what's the point, right?
Yeah.
So when you don't build enough for years, and yes, I'm saying years, plural, you get more than a small shortage. You get a full-on backlog, and that's not good. So
exactly. So let's flip it to the other side here, demand, because she's a loud one.
Yeah.
She's strong. This is the friend that shows up early, brings cash, and says, "So what'll it take to get this done?
Come on,
come to play."
Yes.
Really, a shark. Demand tends to spike when a few of the following economical things happen: interest rates are low, credit is easy, the population grows, or investors decide that housing looks better than, well, everything else. People want to get in on that.
That's true.
Lower rates mean lower monthly payments, right? Which means more people qualify, which means more people show up to the same open house. Yes, exactly. And they're just, I'm just here. I'm just looking around.
I just happen to be here.
You're really scoping out your competition, thinking that, okay, I'm about to be in a war with all of you guys.
Yeah.
And now instead of just 5 buyers, you have 20.
Yeah. So, well, I feel like that could 100% like be a reality TV show. Like picture all the buyers are like all standing there staring at the seller, like waiting for their rose to be handed to them. The challenges are like, who can lay sod faster in the backyard? Or the garbage disposal is broken. Who has the tools to fix it? I don't watch these shows, but
no, I love it. I love it. Or maybe it's like, who's going to leave my house exactly how I left it to you?
Yeah.
Who's not going to rip out my tile?
Yeah, who's not going to take what I thought was the best design ever and just be like, this is hideous and I'm going to fix it. Yeah, that's so funny. I love houses like that. Sometimes you go in and I have to think to myself, that doesn't have to stay.
Sure. Or you're like, somebody chose this?
Yeah, on purpose? Some color schemes
teach their own.
That's a whole different real estate rabbit hole we can go down. So again, like some of the reality shows that I've watched, I like some of them, okay, not all of them. But when things happen, people stop using logic and they start getting completely and utterly unhinged. These people start doing things that they probably normally wouldn't do in their real life. So like as prices go up, people automatically start panicking. Buyers are screaming, if I don't buy it now, I'm never going to get it. Like if I don't jump on this, it's going to be gone.
It's only going to get more expensive.
And that's exactly what sellers are thinking. Sellers are like, actually, if I just hang tight, maybe I can get like an extra 30 grand on this.
A little bit of greed
happening. And then suddenly the market isn't being driven by fundamentals. It's basically FOMO and optimism on Red Bull. Those are the vibes we're on today. And I don't drink energy drinks, but I do sometimes have FOMO. So.
Yes, for sure. Well, I don't drink energy drinks either, but it seems like that's what's happening in the market when a seller's market is happening.
Yeah.
Well, to really just throw a wrench in there to mess things up.
Always.
We got the investors that want to show up here. And they don't really care if the crown molding is, original in the formal living room. They don't care. Nope. They're like, well, I don't care really how this looks at all. Nope. I'm going to rip it up and make an investment out of this.
Yes.
So they came here for the yield, the inflation hedges, and the assets that other people need, the things that make them money. When institutional and individual investors enter a tight market, they don't just add demand, they actually change the rules because they can move faster, write cleaner offers, and sometimes pay cash. A lot of these folks have pretty deep pockets, and an all-cash offer is going to beat out your, 5% down any day of the week.
Of course, yes.
And now this may actually change with the current administration here. There are talks about banning institutional home buyers, which is thought to tackle housing affordability, which we know is a big problem right now.
Yeah.
But we'll have to wait to see if this policy actually comes to fruition.
Yeah.
And this could not lead us more perfectly into how legislation shapes sellers markets.
That's absolutely correct. And government policy plays a massive role, and it's sometimes super, super quiet. We already touched on how the Federal Reserve can lower those interest rates. Some people don't pay attention to them, except for when it does come to purchasing something.
Right.
So when money is cheap, though, everyone is suddenly a buyer.
Yeah.
Right? And boom, demand spikes, and while supply hasn't changed. And you've got all these people who want to buy a house. So one of the reasons supply hasn't changed is zoning laws. So zoning laws, they basically decide where you can build, what you can build, how tall, how wide, how many parking spaces it can have.
What you can use it for.
Exactly. While it can be very restrictive, developers can't just respond to that demand. So even though the prices are screaming, build more, build more, build more, we need more, we need more, we need more, the zoners are like, but you can't build there.
Yeah.
And my personal favorite, and not like that.
Yeah. Well, government moves famously very slow.
Well, it leads us right to our very next point. So even if the zoning is going to allow it, you still have to wait for those stupid permits, right? Nothing speeds up housing supply like a 3-year approval process.
Right.
Here you can build, but now you have to wait for the permits. By the time the project actually gets approved, costs could potentially have gone up.
Yeah.
Rates could have already changed.
Yeah.
And demand might have shifted. Now maybe that house that you wanted to build that's beautiful and thought was going to sell in like 10 minutes, maybe nobody wants it because the supply didn't hit the market correctly.
Yeah, exactly. Well, I think it is appropriate here for us to talk about everyone's favorite dinner topic, taxes.
Yeah, I talked about it last night to myself.
Certain tax policies actually encourage people not to sell. Capital gains taxes can make a seller say, why should I sell now when I can just hold and defer, hang on.
Yeah.
So we're in a holding pattern. Depreciation benefits reward long-term ownership, right? And don't forget our good old friend, a 1031 exchange. We've chatted about it on this podcast here.
Yep.
They keep assets cycling, not exiting.
Yeah.
So they're just kind of staying put, which continues to tighten supply. And lastly, we have rent control. Rent control is well intended, but when returns are capped, investors and developers often stop building new supply because why would you? They're not making money off of it.
Exactly.
So ironically, that makes housing even scarcer. So the policy is meant to help affordability, but it can actually potentially fuel a seller's market in the long run. And policy trade-offs are real, and markets tend to remember them.
Oh, yeah.
Takes a while to recover.
They're an elephant. They'll never forget, right? So let's shift gears now and talk about the people who look past the Zillow listings, those investors. Again, they're not looking at how many bedrooms it has and the square footage and all that good jazz. Nope. So on paper, a seller's market sounds great for an investor. Prices are rising, assets are appreciating, your portfolio looks way smarter than you ever thought it was or ever thought you were. But buying in a seller's market as an investor, well, now all of a sudden your mood kind of shifts, right? In a seller's market, every listing feels like it already has 10 offerings. Like you pull it up and you're like, I'm sure that's going to be gone tomorrow.
Yeah.
And most of them do have offers on them. And those people, like you said, they want the house. They're willing to waive inspections and all the things. And so sometimes that's not good for investors. So let's just point out that that's not a normal investment, like waiving the waiving the inspections.
Yeah.
That's not an investment strategy. That's just a personality trait. They're just trying to hurry up. So as cap rates compress, cash flow shrinks, and suddenly investors are saying, well, appreciation will make up for it, which is exactly how people are talking right before a cycle turns.
Yes. And here is where we see the behavioral shift that the seller's market actually creates. investors stop underwriting deals and start believing them. Numbers become suggestions, spreadsheets become more like motivational posters, and risks get labeled as quote unquote temporary. Now, remember all that policy stuff that we mentioned earlier? If you don't remember that, maybe you should go get your memory checked out because
it was like 4
it was about
seconds
4
ago.
seconds ago.
Yep.
And I'm concerned for you. But this is where it hits investors the hardest. If zoning keeps supply tight, investors assume prices will stay elevated. If tax incentives reward holding, investors will stretch timelines, keep on holding. And if rates are low enough, people can forget that they can actually go up.
Just like that person who forgot about what we were just talking about 4
Yeah,
seconds ago.
exactly.
No, but people do tend to forget things, especially like when they don't want to believe it.
Yeah,
right.
sure.
It's more of like they don't want to believe it. So let's talk about REITs because they kind of show up a little bit differently in this seller's market. So you're never going to catch a REIT panic buying. They're not gonna be like, oh no, gotta buy these. No, in a seller's market, REITs benefit from raising asset values, rental growth, economic on a scale, basically. Their exiting holdings look fantastic on paper. However, big doesn't necessarily mean bulletproof, right? So we talked about that rent controls. Well, that caps the upside. Policy change, well, that reshuffles capital fast. And a good REIT is going to have to adapt quickly.
Yes.
Otherwise, they're going to be left behind.
That's exactly right. And here is an uncomfortable truth. I feel like this episode is full of them. Sellers markets favor institutions. They have cheaper capital. They have longer time horizons. And they don't need every deal to be a home run.
Yeah.
Remember, deep pockets. Smaller investors are going to feel the pressure a lot sooner, which leads to them overpaying or sitting out entirely. So here's the cheat code for those investors. In a seller's market, patience is strategy. Underwrite conservatively, stress test everything, and never forget that cycles don't end because we're bored.
No.
They don't just go away.
No.
They end because fundamentals reassert themselves.
Exactly right. Now let's rewind for a few minutes, and because the sellers markets this is not a new concept in any shape, way, or form. They, like I say, they're just wearing different outfits. You know, you got your 70s, your 80s, your 90s, you got your bell bottoms, your skinny jeans.
Everything comes back around.
Your low-rise jeans. So let's start after World War II. So millions of soldiers, thank you for your service, were coming home. They wanted homes, families, and lawns they could mow, you know, in those little diagonal shapes.
Yeah.
Have you ever seen those on the TV? Like the guy who's like obsessed with getting his like checkered pattern. Anyway, that's what they were looking for. Okay. Well, supply was not ready.
Yep.
Demand extremely ready because everyone wanted to buy a house. Cue mass suburban. I knew when I wrote this line for myself that I was saying it, and this word I was saying, and I said it a million times in my office when we were rereading and I want to say Serbia, and it's not. Suburbanization.
I don't know
why I want to say Serbia. I've been watching way too much basketball. And in one of the cleanest sellers markets in history. So fast forward now to the 70s, where inflation decides to enter that group chat.
Yeah.
Hey, girl, what's going on? So hard assets suddenly became very attractive. Everyone wanted something to hold. We know we've talked about that in some of our episodes. Real estate wasn't just a shelter. It was a hedge. And sellers had leverage because buyers wanted protection from inflation.
Yep, exactly. Okay, so let's fast forward a little bit more. Let's go to the early 2000s. This one still stings a little bit.
Bring it up often.
I wasn't really fully conscious for it, aside from seeing just the look of trauma and fear in my parents'
I was just saying, yes, because your parents are in
exactly.
They sell houses for a living, realtors they are. So
Fully. But credit was cheap, underwriting was loose, and the entire nation believed that housing could only go up. Including my parents.
Yeah.
They're like, wow, this is great. They
Awesome.
just become real estate agents. They're like, this is amazing. Why didn't we do this sooner?
Exactly.
Well, was it a seller's market? Absolutely. Was it sustainable? No. That bubble, she burst.
Yep.
And when demand is fueled by leverage instead of the fundamentals, history gets very educational. You know, you learn a lesson.
Yes, you do.
And after the crash, it turned into a buyer's market. Sellers were flexible, very, very flexible, which is when disciplined investors quietly made generational wealth, picking up houses for 50% off.
Like $5 here, $5 there, and then hung on to them, right? So let's talk about the most recent sellers market. In this post-pandemic market, we're seeing very low interest rates, supply chain issues, remote work, and lifestyle migration.
Yeah.
So suddenly everyone wants more space, and they seem to want it all at the exact same time. Never fails. And this is not a market cycle; it's a traffic jam. Again, before we had to go into work and have traffic jams. Now we have a housing traffic jam. But what we need to take away from history is that a seller's market always starts with a reason.
Yeah.
At the end, it's the behavior. So
Yeah.
there's speculation, overconfidence, and the belief that this time it's going to be different.
Yeah, exactly.
It's not going to be the same. What are you talking about? History never repeats itself.
Yeah, famous last words, right? Well, this leads us to the question that maybe you have kind of coming across your brain right now, and you want a simple answer, maybe, especially if you're thinking about putting your house on the market soon. Is it a seller's market right now?
Yeah.
Well, answer is it depends because markets are getting regional and segmented across the United States. Right now, there are a few things that feel seller-friendly. Limited inventory, long-term housing undersupply, demographics, aka millennials, are starting to age into that ownership category here. But there are other things that are kind of cooling it down. There are higher interest rates, although we've seen them start to lower a bit over the past year.
Yeah.
Affordability pressure and buyers becoming picky again.
Yeah.
So what we're seeing is that some markets are still super hot, super crazy, and others are normalizing. And some are quietly tipping towards more of a balanced market. So what does this translate to? Sellers don't have total control anymore, but they're still kind of holding the mic here and there.
Yeah, they are. So a seller's market isn't necessarily a good thing or a bad thing. It's all about the context, right? So for sellers, congratulations, enjoy the leverage. Please try not to get greedy. Like we said, sometimes they tend to do that. For buyers and investors, discipline beats desperation every time.
Yep.
So markets change, cycles turn, and today's seller's market is maybe tomorrow's cautionary tale.
Yep.
So be careful.
That's right. Well, as always, thank you for tuning in. Make sure to like and subscribe. Check us out on YouTube, and we will catch you next time.
Thanks for joining us. Stay tuned for more insight on our next episode.
And don't forget to subscribe to continue the Alternative Investments chat. See you next time.
Content provided in this podcast is for informational purposes only and should not be construed as professional, financial, or investment advice. This podcast should not be construed as an offer to sell or a solicitation of any offer to buy any securities. We strongly recommend that you seek advice from a qualified professional before making any financial decisions.